Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. I got to remember how to say that correctly because I've been saying Wealth Press for, 6 years now, 7 years? Don't even get me started there. I hope everybody's having a wonderful Tuesday, September 2nd. Yesterday was September 11th, 9/11. For anybody who experienced it, lived it, had anybody who went through it, my condolences too. That's all I could say. It was the worst time. I remember it very vividly. Anyway, today, folks, make sure to like this video, subscribe to this channel, make sure to like this channel, and subscribe to my Telegram channel. Yesterday, I gave a Tesla trade on my Telegram channel. People made really good money. Today, I'm going to give you Oracle day trade, but you got to wait all the way till the end of this video. That's the key. Make sure to like, subscribe, and ask questions in the YouTube channel. I will respond. Let's talk about all the nitty-gritty. So as you can see here, the Nasdaq's down about 49 points, definitely beyond random. The Dow's down about 66, nothing really crazy going on over there. I'm not expecting a crazy market today because, as you can see here, the CPI comes tomorrow. This is a report that everybody is waiting for. Why? Because it's going to give us a trajectory of whether what the Fed is doing is working and how well, and whether they'll have to increase rates in November, not in September. That ain't happening. Or they're going to hold things steady. So just to give you, and I'll talk about this extensively tomorrow, but on a core, they're looking at a lower number. On a regular X with food and energy, they're looking at a higher number. This would dictate that inflation is really sticky. It would be great to see that this number is actually below 3.2, but we are where we're at, and that's already priced into the market. On a core level, we're looking higher. Higher or lower, depending on how you're looking at it. The number's looking better. Hoping that this number is better than this 4.7 number, or the Fed's going to be putting themselves into even a bigger corner. But we're looking for the consensus and the actual number to be lower than the prior number, and at least as good as the estimates, or weaker than the lower than the estimates. The lower this number, the better. So that's coming out tomorrow, and that's going to be huge for the bond market, which is one of the reasons why the bond market's not doing anything. Now, I'm really concerned about the bond market. It's kind of interesting. Nobody's really talking about the bonds. You could see the last few days, they've been non-existent. The reason for that is they're really waiting for this report to come out. This report is going to be extremely instrumental, and bond traders, well, they don't want to put the carriage before the horse. It's like kind of trading ahead of earnings. What's the point? You don't know what's going to happen. And this has me very concerned. And it has me very concerned, especially because technology has been going up. And we'll talk about it. But over the last 3 weeks, consumer discretionary, technology, QQQ, communication services. It's right there. The most speculative stocks are back up. And I bet you over the last week, it doesn't look much different than that. Yeah, consumer discretionary, communication. Where's technology? Technology's down here. But again, I like to use the 3 week. It gives us a nice basis of what's been going on with a nice average flow. So consumer discretionary, technology, QQQ, communication. It's all here. The most speculative tech. You could say this in 5 different ways, but it's all tech. Home builders are actually starting to come up, and that's with interest rates actually coming up. So that's very strange. But over the last week, let's see how home builders, they're not doing all that great in the last week. Consumer staples, utilities, it's been a very mixed market the last 7 days. That's why I like to look at the 3 week. It gives us a little better opportunity. Energies in between, materials in between, technology. And you could see here that the S&P 500 is up here and not down here because it has all that technology in it. It's holding up all of these consumer, industrial, healthcare, because that's all in the S&P as well. So I'm very anxious to see if the bond market is going to come lower, because that's going to put pressure on technology. And technology is right now rocking and rolling, or this can go higher. It's one of those things where good news can be bad news and bad news can be good news. Don't even get me started there. But the truth of the matter is, if the number is weaker than expected, if this number, if the CPI number is bad, if the number's showing that the progress, that inflation is stickier than we are thinking right now, this can go lower. And if this goes lower, it's going to put pressure on the market, especially if we take out this low right here, the 92. We're not all that far away. We're at 93.67. So again, major issue there. Another issue I have is, if you look at crude oil, especially today, look at this thing. This looks amazing today, right? Pre-opened, the futures. But look at XLE. It had engulfing candle to the downside yesterday, engulfed all of these three bars, which has me very nervous. So there's definitely, when we see that, we can definitely tell that there's something cooking up in the energy sector, but the energy sector has also natural gas. Let's take a look at natural gas. Let's take a look at natural gas. Where's natural gas? Here it is. Let's see how natural gas is doing. Just out of curiosity. Aha. Let's see. So we could see very clearly. We could see very clearly that XLE has a lot of natural gas. So if you're in the energy market and you're looking at crude oil stocks, not natural gas stocks, they would look more like the crude oil sector. But if you're looking at XLE, which has energies, like energies as a whole, it has natural gas, which is pulling this down. So again, you have to look at these sectors. Sometimes you have to look at the futures to get a gauge of how they're doing. But crude oil is doing amazing, and that means stocks like COP should be doing pretty good. They shouldn't be doing that. They shouldn't be doing too bad. We should be seeing some upside. SLB, we actually are long SLB right now. This stock should be doing well. But the bottom line is always look at the sector and always look at the ETF with the commodity in question or the ETF, so you could see exactly what part of the ETF stocks are not doing as well if you see that the ETF is not following the futures contract. Hopefully I'm not getting too complicated for beginners here. Let's talk a little bit about the overall stock market, the global economy, what we can project. And I want to talk about Oracle a little bit. So markets participant exercised caution. That's right, ahead of big report tomorrow. This baby's going to be big, and I mean big. And then you've got PPI, retail sales. There's a lot of data coming out second half of the week. Tesla climbed over 10% and was the top gainer in Nasdaq. You're welcome. I got 24 thumbs up and hearts. People made good money on that day trade yesterday. Qualcomm did well. They agreed that they were going to be extending their agreement with Apple, which is huge. That's huge, very, very huge, until 2026. Hostess brand. Do you remember when this company was like on the brink of bankruptcy? Look at this, $5.6 billion deal, and RTX plunged. You're welcome, people in my VIP room. I got people making 400% on that trade. No joke. Come into my VIP room. The link is above or below this video. Noon today, noon. And I'll answer your questions, go over some trades. It's a great time. Do it before I close it to the public. A survey conducted by New York, we talked about this too yesterday in the VIP room, revealed that inflation expectations amongst U.S. consumers remained relatively steady in August. That's good. However, and this is a big however, households grew more concerned about their finances and more pessimistic about the job market. Sentiment, folks. Sentiment is not getting better. It's getting worse. And that's a major issue. Major issue. Oracle came out with earnings. They plunged. I told you guys to get out. I hope everybody got out before earnings. We actually took a profit on the stock. They're down, and I'm going to be talking about how we can day trade them in just a few minutes. There's only a 7% probability that the Fed is going to raise rates and a 39% probability that they're going to raise rates in November. I would keep a very sharp eye on this number because it went from 20% to 30 to 40, and I think it's going to go to 50, 60 depending on tomorrow's report. Europe. Their investors are digesting regional economic data while waiting for the CPI. Healthcare stocks gained ground on Tuesday while technology stocks underperformed. Very strange because they usually key off of us. But remember, they're ahead of us and Oracle didn't do so well. So that could have been part of it. I think I answered my own question. Shanghai closed slightly lower, despite recent, I even have it in black as a result, data indicating signs of stabilization in the world's second economy as investors waited for more clues on recovery and policy measures. That's very, very interesting. At the same time, the Nikkei closed higher today as weaker yen lifted export-oriented stocks and boosted risk appetite. That's great. Auto stocks gained ground on Tuesday as the yen retreated from a one-week low, with Toyota rising 2%. We don't have major earnings today, but we do have earnings on Thursday, which is going to be Adobe, and we have Leonard Homes, which is one of the big five or maybe top four for the home builders. So we will be talking about that. Now, before we get into the Oracle trade, which I think there's an opportunity there today, let me go through the sectors. So you could see here, obviously technology is leading right now. There's no question about that. And consumer staples, industrial, healthcare, small caps are doing bad, and retail's not doing well either. It's kind of, don't you think it's kind of, are you a little curious about this? How can retail be the weakest sector and consumer discretionary be the strongest sector? You know why? Because the technology, consumer discretionary tech companies, wink, wink, like Amazon, they're not really retail, but they are retail. You see, this is what I mean. This is very screwed up right now because half of consumer discretionary company are tech companies and half of the retail companies are tech companies. So it's more like real retail that's doing bad. But Amazon, Apple, those kind of retail companies, which are consumer discretionary, are doing bad. It's just kind of weird that, or good, it's kind of weird that consumer discretionary is the strongest sector and retail is the weakest. Let's see recently. Consumer discretionary and still retail, 3 weeks. Consumer discretionary, retail, 6 weeks. Energy, consumer discretionary, and retail. So you could see there's a huge disconnect between this market because if I put 100 people in the room, 100 people will tell me that, hey, Roger, retail, consumer discretionary are and energy is still doing really well. I like energy. So let's take a look and see what's happening and see if we could find some stocks that could help us to the long side and to the short side. Let's see. Let's go to the S&P 500. Let's look at it over time. Well, you could see right here, NVIDIA right there. Let's see. Yeah, but I don't like NVIDIA at all. Lilly looks really good, but not sure. Adobe looks great, but they've got earnings on Thursday. Carrier Global looks fantastic. ETN looks fantastic. Let's see here. Actually, Intel looks really good right now. Intel looks really good right now. But you know what? I would actually go with Amazon. Because Amazon, you've got computers, you've got consumer discretionary and tech. I believe they've already reported. They've come back with a rage here. Amazon would be my choice for the upside, or ANET, Arista Networks, one of these two. Those would be my bets for the upside right now. And I do like Tesla. Tesla needs to go above the 281 level, but if it does, boom, it's going to go all the way to 300. It's got to go above right here, 280, and then it'll go to 300. So Tesla, if it goes a little higher, Amazon and ANET. To the downside, oh boy. Let's take a look-see here. Well, Dollar General does not look great right now. Let's see here. Well, we called this stock really good too, right here at 87 all the way 90. Coach, retail. And also Estee Lauder. These two right here. These two, they look awful. This thing looks like it's going to go down another level, and this looks like it's going to go to 148 and then break down. Not looking good, and volume is actually picking up a little bit here and picking up here. So TPR and Estee Lauder, they're awful stocks right now. They look like garbage. I mean, they look like garbage, these stocks. Moderna also looks bad. Moderna also looks like it's going to go back all the way to 95. So here we are. Let's talk a little bit about day trading, all right? So Oracle is down. They had earnings. We got out right here, literally right at the top before earnings came out. The stock is down now 13 points. How are we going to day trade this stock? Well, the stock is right now approaching not long-term, but medium-term support levels right around here. And I don't think I'd want to trade the stock to the downside. I think I'd like to trade the stock only to the upside, okay? Because I don't want to trade it to the downside. I want to see if it breaks the 50-day moving average. So I know this is hard to remember. Volatility is huge on this stock. I want to buy the stock if it crosses the 50-day moving average. The 50-day moving average is at 117.82. Okay, if this stock in the next couple of days, if it doesn't do it, that's okay. Maybe 2-3 days. I want to see the stock trade above the 118. 118. If it goes above 118, we want to buy this stock. The next, today's Tuesday. Between now and Thursday, today, Wednesday and Thursday, put a buy stop at 118, and then if it comes back to the bar's low, the low of today's bar, you liquidate it. If it breaks below this level here, to the downside, you don't want the stock. So I'm being very specific. I want to buy it above the 50-day moving average, which is 118. I'm going to give you guys 3 days to do it. If it doesn't do it, or if it doesn't do it, forget about it. Just forget about it. We're going to look for a breakdown here, and if it breaks down here, we're going to look for a trade that'll take us to the 200-day moving average, but we're not there yet. So you want to buy it at 118, and you want to put a stop below these bars, the low of today, whatever that low may be. Now, before I let you be, and make sure to subscribe to our Telegram channel, rogerscott.com/Telegram. The instructions are there. Make sure to join my VIP room today at noon. Now, I'm trying something I've never done before, and I can't wait to share the details. I'm about to kick off my first ever weekly challenge, a cash flow challenge, to be more specific with you. And in my nearly three decades, in January it'll be 3 decades, I've helped literally thousands of people in the market across the world. I'd like to get 100 of you folks, 100 on board, on a mission to target extra cash flow from the stock market week after week. And I want to help make you, yes, you, my next 5-figure success story. So click the link below and get all the details. You guys are going to love it. Subscribe to my Telegram channel. Subscribe to the Roger-Scott YouTube channel. Like our videos. Join Telegram. And send me an email, roger@rogerscott.com. Have a great Tuesday. Bye, guys.